Hi everyone. Curious. The global financial system may be entering one of the most dramatic turning points in decades. For nearly 50 years, the world has operated under a system where oil, the most important commodity on Earth, is priced almost entirely in US dollars. This system, often called the Petrodollar system, helped cement American economic dominance after the 1970s. But now something extraordinary is happening in one of the most dangerous waterways in the world, the Strait of Hormuz. And according to multiple reports emerging in the last few days, Iran may be attempting something that could challenge the dollar itself. Surprised, recent reports indicate that Iran is considering allowing oil tankers to pass through the Strait of Hormuz only if the oil transactions are conducted in Chinese yuan instead of US dollars. If this actually happens on a large scale, it could mark the first real step toward a new global energy currency system. To understand why this moment is so significant, we need to step back and look at what is happening in the Middle East right now. The region has been shaken by a series of military strikes, drone attacks, naval confrontations, and economic moves that are all converging into one geopolitical flashpoint. The Strait of Hormuz sits between Iran and Oman and is only about 33 kilometers wide at its narrowest point. Yet despite its small size, this narrow passage controls roughly 20% of the world's oil shipments. Every single day under normal conditions, around 20 million barrels of crude oil pass through this waterway on giant supertankers heading toward Asia, Europe, and North America. But since the escalation of the Iran conflict in early March 2026, the flow of oil through the strait has been dramatically disrupted. Shipping companies have halted operations, insurance costs for tankers have skyrocketed, and naval forces from multiple countries have begun increasing their presence in the Persian Gulf. One of the most dramatic escalations occurred on March 13th when U.S. forces launched a major airstrike on Kharg Island, Iran's most important oil export hub. The operation reportedly targeted more than 90 Iranian military installations connected to naval mines, missile storage, and other infrastructure used to threaten shipping in the region. Kharg Island is incredibly important because it handles about 90% of Iran's oil exports. Destroying military facilities there was intended to weaken Iran's ability to block or control shipping traffic in the Persian Gulf. At the same time, the broader conflict has already spilled into neighboring countries. Drone strikes have targeted fuel tanks and ports in Oman. Tanker ships have been attacked in the Gulf of Oman, and several regional ports have temporarily halted operations due to security threats. This chaos has led to a near collapse of tanker traffic in the Strait of Hormuz. In normal times, 30 to 35 tankers might pass through the strait every day. But during the height of the crisis, that number reportedly fell to only 2 or 3 ships daily. For the global economy, that kind of disruption is enormous. Energy markets have reacted instantly. Oil prices surged as traders feared a massive supply shock. Several Gulf producers have been forced to reduce production simply because they cannot ship their oil to customers. Some countries like Saudi Arabia and the United Arab Emirates have tried to redirect exports through pipelines that bypass the Strait of Hormuz, but those alternatives only handle a fraction of the total oil flow. In other words, the entire global energy system is now facing a bottleneck. And this is where the currency issue enters the story. According to multiple reports circulating this week, Iran is considering a proposal that would allow a limited number of oil tankers to pass safely through the strait, but only if the oil cargo is traded using Chinese yuan rather than US dollars. This idea may sound technical, but in reality, it carries enormous geopolitical implications. For decades, global oil markets have been dominated by the petrodollar system. After the collapse of the gold standard in the early 1970s, the United States reached agreements with major oil-producing countries, especially Saudi Arabia, to price and sell oil exclusively in dollars. This created a massive global demand for the U.S. currency, because every country that needed oil also needed dollars to pay for it. Over time, this system became one of the foundations of American financial power. Countries around the world hold trillions of dollars in reserves partly because they must use dollars to purchase energy. But China has been working quietly for years to challenge this system. As the world's largest importer of oil, China has a strong incentive to reduce its dependence on the US dollar. Beijing has been building financial infrastructure to support international yuan transactions, launching yuan-based oil futures markets, and encouraging energy exporters to accept Chinese currency in exchange for oil. This strategy is often referred to as the creation of the Petro Yuan. Until recently, however, the Petro Yuan remained mostly theoretical. Most oil exporters continued to prefer the dollar because it offered deeper financial markets and greater global liquidity. But the crisis in the Strait of Hormuz may be changing the equation. If Iran begins allowing oil shipments through the strait only when payments are made in yuan, it could force buyers and traders to start conducting large energy transactions using Chinese currency. Even if the system initially applies only to a limited number of shipments, it could open the door to a much broader transformation. The reason is simple. Once oil starts being traded in a new currency, financial institutions and commodity traders begin building the infrastructure to support those transactions. Banks open yuan trading desks. Oil futures contracts start referencing the new currency. Central banks begin holding more yuan reserves. Gradually, a parallel energy trading system could emerge. For China, the timing could not be more strategic. The country already imports massive amounts of oil from Russia, Iran, and several Middle Eastern nations. Many of these countries face Western sanctions or political tensions with the United States, making them more willing to experiment with alternative payment systems. Russia has already increased its use of yuan for energy trade since the Ukraine conflict. Iran, heavily sanctioned for years, has also explored ways to bypass dollar-based financial networks. Now the Strait of Hormuz crisis may provide the perfect catalyst to accelerate these changes. But before declaring the end of the dollar era, it is important to understand the limitations of the yuan. Despite China's enormous economic size, the yuan still represents only a small fraction of global foreign exchange reserves. The US dollar remains dominant in international trade, banking, and investment markets. One major reason is that China maintains strict capital controls. The Chinese government regulates the flow of money in and out of the country, limiting the ability of foreign investors to freely move funds. Global investors also trust U.S. financial markets more than Chinese markets because of their transparency, legal protections, and deep liquidity. So while the yuan's role in global trade has been growing, it still has a long way to go before it can rival the dollar. Nevertheless, history shows that currency systems can shift over time, especially during periods of geopolitical upheaval. The British pound once dominated global trade during the height of the British Empire. But after 2 world wars and the rise of the United States, the dollar eventually replaced it as the primary global reserve currency. Now, Some analysts believe we may be entering the early stages of another transition. The battle for currency dominance is no longer happening only in financial markets. It is happening in shipping lanes, oil fields, and geopolitical conflict zones. And nowhere is that struggle more visible right now than in the Strait of Hormuz. If Iran successfully links oil shipments to yuan payments, even on a small scale, it could trigger ripple effects across global markets. Energy traders would need to hedge currency risk in new ways. Central banks might reconsider their reserve allocations, and countries seeking to reduce their exposure to U.S. sanctions might see yuan-based energy trade as a viable alternative. Of course, the United States and its allies are unlikely to accept such changes without resistance. Control over global financial systems has long been one of Washington's most powerful geopolitical tools. The dollar's dominance allows the U.S. government to impose sanctions, restrict financial transactions, and influence global trade flows. Any attempt to undermine that system could provoke strong economic and political responses. For now, the situation remains fluid. Military tensions in the Middle East continue to escalate. Naval forces from several countries are increasing patrols in the Persian Gulf. Energy markets remain volatile as traders try to estimate how long the shipping disruptions might last. But behind the military headlines, a quieter financial battle may be unfolding. The world's most important shipping route may also become the front line in a global currency war. Whether the yuan truly becomes a major energy trading currency will depend on many factors: China's financial reforms, geopolitical alliances, and the willingness of oil producers and buyers to adopt new systems. But one thing is clear: the events unfolding in the Strait of Hormuz are no longer just about oil tankers or naval patrols. They may represent the beginning of a much larger transformation in how the global economy works. If the petrodollar system starts to weaken, the consequences could ripple through every financial market on Earth, from currencies and bonds to commodities and stock markets. And the next few weeks may reveal whether this dramatic shift is actually beginning. Because sometimes the most powerful weapon in geopolitics is not a missile or a bomb. Sometimes it is a currency.